There's a very interesting pattern developing here for rare earth and strategic metals ETF. First off, read this disclaimer carefully. So rare earth and strategic metals, it is something that is under the sectors here, basic materials, and here you have them. So 72% from the 52-week low, but some distance from the 52-week highs. Okay, if you go here, this is the, well, here is the name of the ETF. REMX is the ticker. Remember, of course, to like, subscribe, share, and comment. So here's the seasonality. REMX, and you can see here that, we are currently towards, the later part of October, and this is a bit of a mediocre period for this ETF, but as you can see, this ETF, it rarely has strong months. Let's look at it against actually the XLB, which is, the basic materials ETF. That. Yeah, not that promising, but there are reasons to be a bit more optimistic here, because this is all the history we have for REMX. So in case you don't know, rare earth and strategic metals, these are materials that are used in a lot of, super high-tech products. So these are very much sought after. But there's a lot of political machinations and schemes around these metals because of their tactical value. Hence, there's political games that are also influencing the price of these products, these materials. This is all the history we do have, and you can see something interesting has happened. We've gone from being very bearish, quite clearly we were in a bear market. If we measure the fall from the high here all the way to the low, minus 90%, down to this all-time low here is minus 92%. That's definitively in the bear market category. But here the bears are completely in control, except for a few, rising cycles for the bulls. But here there's a game changer. Here you can see the bulls have this major rally. So this rally here to this high was actually a whopping 187%. That's pretty substantial. And that changed the market. So even though the bears have come back a bit now, the bears weren't able to do this. The bulls are fighting back, and we are seeing some very constructive improvements here. You could make a strong case that this pattern here is a left shoulder, head, and the right shoulder, and we had a major breakout. Here, again, we have a left shoulder, we have a head, and we have a bit of a right shoulder here. So this is an inverse head and shoulders pattern. It is a bullish pattern. It doesn't always work out, of course, but the benefit here is that we are looking at weekly data points, okay? So this here, it's a pattern that's been developing for, let's measure it from here. So it's been developing for over a year. So this is quite a substantial pattern. So there's more meaning to it. It will be more difficult for the bears to break a pattern that's been developing over so much time. I mean, they have had a lot of time now to actually break it, but they haven't been able to pull it off. And they sure wanted to. So you could make the bullish case that, well, we have already seen this ETF being massively repriced after a major and very fierce multi-year bear market. Further, we do have an inverse head and shoulders pattern. We are forming a base. I think this is interesting. If we look here at the moving averages, we are seeing some price action be a bit squeezed here between support at the 50-week moving average in green, which has been important in the past, and we have resistance here way up here from the 200-week. But we have broken out now above many resistance levels. If you look at the RSI, you see that we have basically been oversold for a very long period, except here. You can see here that the lower range of the RSI is definitively a place where we do see some dip buyers step in, at least as of late. So you can see here also by the RSI that here we have extreme bearishness. We are way below oversold for multiple months, but here there's been a change. There's a 47% negative correlation with the S&P 500. Okay, so here are the daily data points. This is some kind of price anomaly, so ignore this right here. So when we look here at moving averages, we are above the vast majority of them. So there's been quite some constructive developments here. And if you measure the recent rally from this low here to this high, that was 84%, 70% there. And if we are to go back here and, okay, let's remove this. So if we are going to test some of these highs from the current level, let's measure, that would be a rally of, wow, that would be a rally of 141%. That would be good. That would be a very strong rally. If you look at the accumulation distribution line here, we do see actually some very constructive developments. If you compare the highs here to where we are now, there's been significant amount of buyers corroborating this rally, which is, supporting the bulls. 95% correlation here with S&P 500 on the daily data points. Let's look a bit at some other metrics. Options are available, that's great. It is also shortable, but I don't think that this is really begging for it to be shorted. Here is the performance. We do actually have a 2% year to date. But as you saw, if you timed it a bit, you could have a significant rally, a more significant one, and we do have this inverse head and shoulders pattern that is in development. That's the key thing about technical patterns. You want to start trading them when they are developing, when they are not fully formed yet. Because the problem a lot of investors get into is that, they wait until an inverse head and shoulders pattern has like a breakout above here, or maybe they want to see it fully formed, maybe around here, and then you have missed out on, some significant percentages. Of course, ideally, you would want to buy the lower end of the head or the low end of the right shoulder, but yeah. Okay, so let's go here to, we do have some information here about this ETF. So this ETF gives investors exposure to rare earth and strategic metals. Based on the fund's top holdings, exposure is tilted towards producers of titanium and molybdenum, while producers of cerium, manganese, and tungsten are also covered. It's a good ETF for those who are betting on increased demand for specialized metals. If we go here to dividend and valuation, so there's a 38 PE. Dividend is 0.53%, so I mean, not much in terms of dividend, but overall it certainly is a very interesting, and it's a very specialized, so you don't really have any other options out there. So here are top 15 holdings, and you can see that there's a bunch of Chinese and Asian names. If you go here to asset allocation, sector breakdown, with basic materials, the biggest part. Market cap breakdown, we do have some balance. Asia 48%, then Asia Pacific 22%. So here you can see the countries. Okay, so this is where the politics get in. So you have a major part here in China, and some countries that are have deeper economic ties to China. And so basically you could make a case that the price has been suppressed due to political reasons as well. Okay, whatever you do, of course, don't fight the trend, and may the trend be with you. And to be clear, long term, I am bullish on rare earth and strategic metals. I do think that some of the worst bearish forces are going to subside a bit, and that's something we are seeing here in the charts. But of course, you always want to be nimble with these products that move in big percentages.